Yeah, we're taking the approach of just trying to stay in one place at Christmas. That's it's not worth the it's not worth
Well, welcome to this meeting of the investment board here, 13th of December. We have a fairly full agenda this morning. Can I thank those people who have come into the building today? We are quorate, so we can make decisions without referral to the board. But I recognise, in light of recent government announcements, that quite clearly people need to feel safe, and therefore our colleagues on screen will contribute, but as you know, will not be able to vote on any of the matters that we are discussing this morning. Can we use the microphones when we're speaking? Because obviously the people who are online can only hear us in that particular case. On that basis, I will take apologies for absence. Any apologies?
Chair, we've had apologies from Councillor Maria Crompton, Councillor Tony Jefferson, and Councillor Matt Jennings is substituting for him, and then Councillor Jim O'Boyle, and I believe Councillor Hare is substituting for Councillor Boyle.
Thank you. We've been notified of the substitutes. I therefore go to declarations of interest. Members are reminded of the need to declare any disclosable prejudicial interest they have in an item being discussed during the course of the meeting. In addition, the receipt of any gift or hospitality should be declared where the value of it was thought to exceed £25 for a gift or £40 for hospitality. Does anyone wish to declare? Councillor Chatfield.
Yeah, just in relation to item 13, which is the more Murdoch and Pittman, just that Birmingham City Council is the landowner on that site. It's non-pecuniary, but just so.
Councillor Simpkins, I think you have your hand up.
Yeah, non-pecuniary, member of West Midlands Trains Board as Transport going to be discussed, and also West Midlands Pensions Board member. That's also to be discussed.
Nick Abel, please.
Yeah, thank you, Chair. Item 14, the Housing Association involved as a client of Wright Hassel, which I'm chairman of.
Thank you. When you've made your contribution, can you put your hands down? Otherwise, you're going to confuse me. So thanks for that. Okay, we'll therefore move on to substantive items in the agenda. The minutes of the 18th of October 21. We're just asked to note those for the record, unless anyone has any items they wish to change. I'll ask Ian Marsh if there are any updates before we move on. I can't see anyone. Ian, are there any updates you wish to give on any of the items?
None in this instance, Chair.
Thank you. So we'll therefore note those accordingly. We therefore move to item 5 on the agenda, which is the investment programme update, pages 7 to 24 within the pack. And I'm going to pass to Ian Martin just to bring forward any highlights, and then I'll go to the recommendations. Ian, thank you.
Thank you, Chair. So on the investment programme update and the dashboard, we have funding commitments as at the end of November of £858.5 million. This is no change in the previous month. And that's versus the funding available from confirmed income streams of 871 million. It excludes earmarked contributions approved by WMCA board, which would use the full value. At March 2021, WMCA board has agreed to increase the affordable limit to 871 million following a review of future interest rates. Since the last board, WMCA officers have approved 2 requests under the delegated authority they have. These are a time extension for the HS2 Jobs and Skills Award, which stands at £810 million. And that was due to COVID-related issues and the team working on other matters related to the COVID that's extended that programme. There's also approved use of the original funds awarded under the Smart Resilient Assets under a SOC to SMBC, and that's now using surplus there or remaining funds to progress that from an OBC to an FBC level. Neither of these are adding any additional financial burdens on the programme. They're working within the envelopes already approved. So they're largely in terms of time extensions. Costs incurred, or our drawings to the end of October, were £373.6 million. That was up on the previous September figure by £24.1 million, which is encouraging, seeing the money being put to use and invested in schemes. In August, we'd asked the board note a decision in July around DFT's guidance in respect of £4.2 billion for transport schemes under the City Region Sustainable Transport Settlements, or CRUS. CRUS aren't part of the investment programme, are not intended to be part of the investment programme, but some of the transport projects with partial investment programme funding, where funding is yet to be received under the investment programme, are included in the long list of priority projects reviewed by the Mets and TFWM. So CRUS funding could allow progression of some of these projects. The original investment programme contained 2.12 billion over 33 projects and programmes. Of that, 955 million was made up of transport projects, so substantial. There's 877 million pounds yet unfunded, and all 33 projects need some element of additional funding to be completely finished. So the CRUS award by HMG was 1.05 million pounds announced in the autumn budget as the West Midlands share of that, and it's expected that the programme of projects will be presented to WMCA board in January for their approval. Hopefully, well, there are a number of investment programme projects on that list, so hopefully that will present this significant reduction in the future demand call from the unfunded element of the investment programme.
Thank you. That's actually 1.05 billion.
Yeah, sorry.
No, that's fine.
Yeah, just don't worry about that one, Chair.
That's good. I think the point that you've made with regard to the potential use of some of that in some of the unfunded projects, I think is highly relevant. So I'll take questions from the room. Councillor Chatfield, please.
Thank you. And you've actually answered the question I was going to ask is what the implications were of that funding allocation. But there's a couple of things just on the dashboard, Ian, and I know you always love it when I raise a couple of things on it. One of them is the Metro Bilston, it's on page 23, sorry, Metro Bilston Road Track. The completion date for that was in 2017. I'm just wondering if there's any reason why it's still lurking about rather than being turned blue and dropped down to the bottom. And the other one was just, there's the second bottom, same page, ultra low emission vehicle strategy. Was due in September 21. I just wanted to check whether that had happened or not, because I think it has.
Ian, are you able to answer those?
Yes, I think so. I was waiting, Chair, for you to move onto the dashboard, but Councillor Chatfield's moved ahead of me slightly, but I will pick those up. On Bilston Road track replacement, yes, I believe that's done. I think that relates to retention monies still to come, but I'm going to have to go away and check that. But the scheme, to all intents and purposes, is complete. So I'll check the date and make sure that we can box that one off and issue a completion statement. With regards to the vehicle strategy, the ultra low emission vehicle strategy, that'll be closed off once I've got the final report. So the work is done, but until I'm in possession of a report, which is the output from that, I haven't closed that off yet with a completion statement, but hopefully that will be imminent.
Yeah, thanks, Ian. Thank you.
So, Councillor Simpkins, please.
Yeah, it's just a question, as we've announced last night about the measures for COVID. Is there any planning about any slippage in delivery, especially on transport, and also additional costs for the rate of inflation? And my other question is about Bilston tram stop and Wolverhampton tram stop into the city. It's taken forever for us to connect the train station into the tram system. Can we have a report back on that, please?
Any initial comments from anyone on those issues? I'm sure we can bring a report back for Councillor Simpkins with regard to the connection to the rail station.
I can cover them very briefly, Chair, from my knowledge. So we continue to monitor programmes in general on COVID slippages and report back by means of the dashboard. And here, there's also obviously various means in which TFWM reports separately on all projects. But our intention here is to monitor funding. So from an investment programme point of view, we're doing that. with regard to the finalised connection of the railway station, I understand from that, because we did take a report from that and an update from the project team, that the last bit of the tram network and the line there by the railway station had to follow completion of the works on the station. So as the works on the station were delayed, so was the tram. But I understand in the sequence of works, they have to be after those essential works at the station. They couldn't have been completed before. So it's not necessarily a delay on Metro, it's a delay on the station that's caused that.
Lynn, do you want to come in?
Yeah, just to say, nobody's currently reporting any variances, but obviously this news is of the tightening restrictions is very recent. So we will be going around and checking everybody again in terms of their returns, and certainly within the WMCA for schemes that we are responsible for physically delivering ourselves, then we are reviewing that at the minute in case there is any implications of the restrictions that are currently being brought forward. And then in terms of the financial resilience, as we've said before, the level of the combined authority contribution to the majority of these schemes is capped. So we're making grant contributions to local authorities for a lot of the schemes in the investment programme, which means actually the financial risk is sitting with the individual authority, because our contribution is a blended mix of a whole host of funding to far wider schemes. That said, we are looking through the CRSTS allocation to establish some sort of contingency for the capital project risks that we are seeing come through, and we'll pick up that issue in the draft budget report that's going to the January board around capital resilience.
Thank you for that. Excellent. Okay. No further questions. I'll go to the items recommended. So investment board is recommended to note approval under delegation authority to WMCA officers of the 2 business cases submissions disclosed at section 3. No WMCA investment programme funding status and affordable limit as outlined in section 4. Note the status of the city regional sustainable transport settlements as outlined in section 4. And note the regional investment programme delivery update detailed within this report and appendices, the dashboard at 4. Thank you. Any other items, Ian, before we move on?
No, that's great, thank you.
Before I take the dashboards from Nick, item 9 on the agenda, we are going to move that item into the private section of the agenda due to confidential commercial information which is contained in the verbal update that we're going to be given. So I hope members are supportive of that approach, but that's where we'll take it. Any dissent? No, I think that's fine. So we'll do that accordingly. I'll therefore take items 6, 7 and 8 as we normally do. These are the dashboards, collective investment fund, brownfield land and property development fund and the revolving investment fund dashboards. Any highlights, Nick, before we move to the next item?
Thank you, Chair. Yes, as you say, these are the public information dashboards for the WMDC managed SIF, RIF and BLPDF funds. I will provide a brief update under private session, as usual.
Any questions on the public matters? None indicated. Thank you. We'll therefore move to the enhancing the collective investment fund and revolving investment fund contained in pages 37 to 44 within the issued papers. It's a public matter. Ian Martin, do you want to speak to this, please?
Yes, thank you, Chair. So SIF and RIF, as board know, are our debt funds designed to help developers delivering schemes where traditional finance may be difficult to obtain, as just not available. This paper clarifies a number of the practices that we're currently undertaking, and it also seeks to note these formally. We've also included recommendations of new activities and ways of working that potentially enable SIF and RIF to deliver more within the existing agreed ceiling of the £210 million and without taking additional risks. The progress to date section of the report gives the key achievements of the fund so far, where we've committed money. So just some of the highlights: we've agreed finance that will deliver 113 acres of regenerated brownfield land, 1.8 million square foot of commercial floor space, 1,719 homes and 4,445 jobs. And that's all in the last 5 years. So the funds are clearly doing their job and they're successful, but they could do more, we believe. So the paper covers the recommendations, but in brief, they are the dealing with limits. We've got separate SIF and RIF limits, and to offer flexibility in the future, what we're saying is the combined limits total £210 million, but perhaps we should not have limits for each fund, and we should offer flexibility within them to operate within the total combined ceiling of £210 million. We've recommended regarding concentration risk, we had discussions about concentration risk where we would only allow £10 million of total funding to one controlling entity for deals that could be one or more deals that add up to that £10 million. And on concentration risk, what we're saying is we'd like to extend that to £20 million under the purview of the investment board. Currently, it can be done with reference to CA board, but that adds an additional step that isn't very commercially flexible. So if we need to have quick decisions going back to a commercial developer, it would be better if we had that limit. It would still give investment board the ability to defer something for consideration at CA board if they find contentious, but given the quality of debate in the room about these things and the assurance process that they follow, it was felt that that limit could be extended. There's additional measures around environmental and social. We're suggesting to extend the remit of SIF and RIF to include green investments. So those that share real estate characteristics, though. So this would be asset-backed type loans. So we've got a physical asset to fall back as part of the security, so we're not in any further risk position. So the likes of solar farms would have an own income stream and an asset sitting behind them. That would be the type of thing that's envisaged there. We're also suggesting to extend SIF to cover investment property loans, not just development, but where refurbishment of the building will enhance its environmental credentials and energy performance. So that would enable an investor taking on a building to go through a rolling refurbishment to add a lot of green measures to their building to enhance its environmental credibility. We've recommended adding stabilization periods. So currently we do this in some instances, but this formalizes it where a developer has built a building, whether that's residential or commercial, and they've got a period to fill it full of tenants to generate the income before sale. So it's supporting that income stabilization period, which would have the effect of extending term loans up to a maximum of 5 years. We already do 3 things here, but while we're not forbidden from doing them, we're not explicitly approved either. One is formalising revolving credit facilities. So we do offer what are known as RCFs already and have actually completed one at Portloop previously, and a previous Bill 55 scheme has been approved. These are ones where instead of the debt being immediately repaid every time there's a sale, the money can be recycled within the scheme, provided it meets all of the due diligence criteria around loan to cost, loan to value. We are not forbidden from extending this facility to owner occupiers. There's no reason why we shouldn't formalise the inclusion of that. Again, we'll have an asset-backed loan. and we're not formally covered in terms of loan participation, but neither are we explicitly stopped from doing so. This would be situations where we would have a known and trusted lender, like say a pension fund, quality pension fund that wishes to make a loan, we wish to make a loan, we participate on exactly the same terms for exactly the same shared risk. And then finally, we've recommended some minor changes in terms of application of the single commissioning framework, which is more about the application of it rather than the principles. So this is about processing things quickly, but it's certainly not about just saying things like the criteria around 20% affordable housing, which would remain. So of the above, some may need consideration by WMCA board. Some could be approved here.
Thank you. Any comments from anyone else? Linda, can you just give a comment on your view on this, please?
Yeah, I mean, I've worked with Ian on this. We are in agreement, I think, that the funds are working well, but they could do a lot better. We've crafted this proposal in conjunction with our fund advisor, Sue and Nick, who are in the room with you today, and we feel confident that these changes will enable us to do more with the funds, but without increasing the risk that we're exposed to. In terms of the concentration risk, the reality is that actually, you know, having to take something to CA board can compromise the deal from a commercial perspective because of the time that adds. And in reality, there's very few that actually we've had to take. And in reality, they've been approved just essentially been approved at board. The reliance and the controls are actually around the assurance, the due diligence, the KYC, and the security we get on these schemes, rather than the actual need for the approval. So I'm comfortable with the recommendations in here, but obviously I'm happy to take any questions along with Ian.
Thank you. I have three contributors. Nick Abel first, then I'll go to Councillor Simpkins, and then Councillor Chatfield. Nick Abel, please.
Thank you, Chair. I think these two funds have worked incredibly well. I commend the people who've operated them. I think working together with this board, the schemes that have been supported by these loans have been very successful, and the outcomes that we wanted to see delivered have been delivered. So I would wholeheartedly support the flexibilities that those who deliver these on the ground are asking for to enable those outcomes to continue. The only thing I would say in relation to the RIF, for the life of me, I don't understand the residential market at the moment. But I would, and I think we do concentrate on schemes that I'm about to describe, but I would like to see us concentrating on housing schemes that deliver the types of houses in the places we want them to be delivered throughout the combined authority geography. I think we do that, but I think we ought to really concentrate on those schemes that otherwise we might not see being delivered without our contribution from the RIF in places where we really need to see them delivered. Thank you, Chair.
Thank you. Gareth, you want to come in at that point on the point that's just been raised by Nick Abel there?
Yep. I think the key for me, Chair, is that wherever possible, we are trying to integrate the deployment of the funding with the work on local plans and the work around where we're trying to focus housing, particularly on brownfield sites, and particularly also looking at density around critical transport hubs, Nick, and how we can try and concentrate residential development in town centres and around critical transport hubs. And that's become a big theme of the Housing and Land Board as well over the last few years, is trying to focus housing in those well-connected locations with strong public transport links. But it's a good point you make, and what we will do, Chair, is we'll make it more explicit going forward on all grant investment board papers, and I suggest Ian and other colleagues we do the same on how it's aligning with the local plan for the relevant area.
Yeah, I think the local plan's critical in that regard. Councillor Simpkins, please.
Yeah, it's just to add to that. I mean, the local plans are great, but we need the finances to, especially to crack on with brownfield, and it needs to be fast tracked so it can bring the development quicker on board. We also need to make sure that there's a level playing field across the combined authority. So where we've got that, we take big pockets of brownfield so we can do that faster. And what moves me on to the next part of my questions, and the next thing I think that we should be doing is we should have a green strategy. We should have a green strategy that aligns itself to not only house building but employment, and that should be at the forefront of everything, because what we need to do is to invest not only in construction but also the employability that goes with that. We need to make sure that anybody in the West Midlands or the wider area of the combined authority, the shires, if they come with ideas of investment, we should be there to develop that. So we should have, what I advocated last time, is all these investment boards that we've got, that should be like a green investment bank. That'll put us in good stead, I think, for the future. We've all heard about COP26 and what's come out of that. Now we need to act on that. We need to make sure that we're active, not only in housing, but also in employability sites as well. So if we could have that to come back early next year, or that'd be really useful.
Thanks for that. Gareth, you want to come in, please?
Well, just to raise, Chair, the fact that under the Housing and Land Board, we continue conversations with central government to try and secure more grant funding for commercial development. As this board is aware, and the Housing and Land Board is aware, most of our grant funding, apart from BLPDF, from central government remains housing focused. And one of the areas we are particularly keen to explore is securing more grant funding for commercial development going forward, to try and tackle particularly the brownfield sites in the region for commercial development. They need grant investment before they can get off the ground. And the BLPDF has been very successful in this region, alongside the housing funds, which have given us a strong track record of performance in the minds of central government. So we're positive about our potential to unlock that funding, Chair.
Thank you. Ian Martin, please.
Yeah, just coming back on Councillor Simpkins' comments, absolutely echo them. So in terms of speed, certainly two of the measures proposed here are designed at speeding things up, and certainly two of the measures are designed targeting specifically green measures. So absolutely support that. With regard to wider contexts of things like Green Bank, etc., unfortunately, the remit and terms for this board would allow consideration of proposal, but not the strategic thinking. But absolutely willing to take that and ensure it's adopted by said board, which is kind of the appropriate place to consider that. I would have thought the concept of and potential implementation of suitability of for strategy, if that's okay.
Yeah, I think the new board we create as well does the strategic elements within those things. So I'd assume that would be the place where some of that sits. I'll just make a general comment, really, just reflecting on local government. I mean, we are very much dependent on applications that are made to us for funding, which are driven through each local authority. We don't have that responsibility. We don't identify the schemes, they bring them forward to us. And, you know, within many of the local plans, there's a whole raft of issues with regard to the green environment and how that's being dealt with. So I would urge any local authority who are in preparation of the local plan to ensure that those elements are put within it. And certainly the local plans that I've seen do fundamentally deal with brownfield land when it's available. And that is also another issue, because an awful lot of authorities in the region don't have very much brownfield land which has been previously developed. So just my comments. I'll take Councillor Chatfield, please.
Yeah, first of all, I very much welcome the focus on using sort of centres of transportation and well-connected areas as being the focus of development. I think that's very sensible. The other point I was going to make just on the housing side, though, was around affordable housing. And I'm glad we've got the environmental, the ESG criteria allowing for consideration now. But I do think we come back to this issue of affordable housing. And for us, But certainly from the Birmingham perspective, it's about housing supply, but which we're doing quite well on. Where we're not doing so well is an affordable housing supply. That's the big challenge for us. And obviously anything that these loans and grants can do to support that agenda is welcome. And I don't know whether we're missing a trick perhaps in being slightly more assertive around the issue of affordable homes. The other point I was going to make, obviously there is I don't take Linda's point about, but I do think there is an increase in risk here purely just in terms of if we're going from 10 to 20 million, it is by any stretch of imagination an increase in risk. And I'm just slightly, I suppose what I would like to see at this board perhaps is more of the financial information that underpins those bids. And if that has to be done offline in private, then I think that's perfectly acceptable. But I think I would welcome a greater degree of assurance around the numbers, not only in terms of the individual projects and proposals, but also the financial information that sits behind the companies that are bringing forward those propositions as well. I suppose nightmare scenarios we end up, we've had recently a couple of contractors going under that have caused us difficulty in Birmingham, and I suppose I worry that could happen here as well. Not saying it will, I think there's strong due diligence, but I think just for this board's purposes, I think perhaps we need some greater assurance given the increase in risk we're approving.
So on the point of the concentration risk, I think Linda's given a view on that. I think it has been a matter of debate within this board on previous occasions, and we are very cautious with regard to the concentration risk. But as Linda has quite rightly pointed out, whenever we've referred those matters to the full board, in all cases, as far as I recall, they have been approved accordingly. Any further comments on that point? I don't see any hands being raised at this point. Councillor Simpkins.
Yes, Chair. With what we've talked about the green issues and the green agenda, the government's going to now enter into a retrofit scheme. Now, that's going to prove great for carbon capture, but not so good for housing stock. We need to make sure that we build into housing stock with local authorities, whether it be arm's length or direct council stock, how we then mitigate that green agenda because of that. Because putting a £20,000 worth of heating system into a house that leaks predominantly is not the best use of resource and use of money. So we need to make sure that we're mindful of that, and also allowing to rebuild with our partners in housing associations and also local authorities with arm's length or council stock. That needs to be a big part of what we're trying to do to tackle the green agenda and the carbon capture.
Again, Councillor Simpkins, don't disagree, but those matters are very much in the hands of each local authority who control their own housing stock. So, we've got to retrofit, particularly within the local authority area. That's a matter really that they do. Whether we invest in that, I think that's a legitimate question for us. I think that's important to go forward. And what we're proposing here with regard to flexibility is an environmental focus. It does say that with the paper. I think that's important.
What I'm asking is we shouldn't exclude them, because they're a big part of what we're trying to achieve with regard to that green agenda. And also they would welcome the opportunity to apply for loans and funding to deliver better housing stock. There should be a provision for us to do that.
Noted, we'll take that. Councillor Bird, please.
Just for the record, I'll repeat this again. There is a minimum requirement of 20% of affordable housing on everything that we do. And I think it's important that we understand that is a minimum. Some of these are far more. So every investment that we make does bring forward that 20% affordable. Having said that, I think there is much to be argued that densification, if that's the word, of sites that we identify as brownfield sites, in other words, to make them more dense, and town centre living, which Gareth and I have spoken about and had a paper written. If you bring people back into town centres, you've got more chance of them resurrecting a town centre life, which at the moment, as we all know, is stagnating. But it'll be interesting to see what sites the combined authorities brownfield site review, which the mayor has commissioned, and some would say without the combined authorities authority, but the mayor has done that. And I think that any sites that come forward to protect the green belt in that should be identified now, so that when we do go to the inspector in the Black Country review, we can actually say, oh, by the way, we found these sites. I had a meeting only last week with Gareth Bradford and a landowner right opposite the combined authority, right opposite his offices on the other corner. And he came forward with a scheme which he showed us with 3,000 houses, sorry, 2,000 dwellings that can be brought forward, which we didn't even know about. And there's a site that's right under our nose, so to speak, and I'm not knocking anybody on this, but there are people out there that have got land that can bring forward residential properties in an affordable nature, close or in town centres, which would alleviate the pressure we've got on Greenbelt.
Yeah, absolutely endorse what you say. Nick Abel, please. Sorry, it's Nick Oakley, please, sorry.
Yeah, thanks, Chair. Just coming back on Councillor Chatfield's point about the due diligence on the developers, I would say WMDC, we do undertake rigorous due diligence on all the developers. In the last 5 years, we've actually committed 157 million of funding with no losses at all and no provisions. We do include fairly detailed information within the investment papers on all the developers. But we're happy to expand that and undertake that with the finance team. The majority of projects that we put forward are only 70% of cost. So typically, a developer will have 2 or 3 million of their own cash in ahead of the CA funding. So we do believe there's a strong track record of risk analysis in there.
Thank you for that. Councillor Bird, your hand's still up. Do you want to come back? If you're on mute.
You ought to put that in the English dictionary now, you're on mute. I think that we perhaps should, as an investment board, via the Housing and Land Board, when we see the brownfield review, I think it should go to the Housing and Land Board to see if there's any sites, or to the officers at least, to see if there's any sites we haven't considered. And then from there, come to the investment board with any that we identify that we could assist in bringing forward residential development. Thank you, Chairman.
Thank you for that. As I predicted, Nick Abel wants to speak.
Thank you, Chair. Just go on from what Nick Oakley just said, and I do come from a professional services background in real estate, and I know there are a number of people involved in this board who do have a real estate background. But I'm always very, very happy with the degree of security that we get over sites, and one of the things I always look at. So that kind of goes hand in hand with the risk that we're taking in terms of the affordability of the loan by the developers. So I've always been very satisfied with what's been put forward to us.
Thank you for that. I'm going to move to the recommendations in a moment. Just one comment from me. We are making a number of changes here. I think perhaps we do need to just get a view from governance as to whether any of these matters do need to go to the full board. So can I leave that in somebody's hands, please?
Yes, where you're making changes to your terms of reference, that will be a recommendation to the board, because it's for the CA board to agree each of its committees and boards' terms of reference. So that will be a recommendation to the next meeting in January.
So these are, in essence, recommendations that we're making here today, and they're listed on page 37. We are noting item 1, we're approving item 2, 3, 4 and 5, but those are recommendations to the full board, as I've been advised. All agreed? No dissent? Nick, sorry, Ian Martin, you want to come back?
I was just going to say, thank you, Chair, and thank you very much for the clarification on what's a recommendation going to the board. Can I just undertake to take that away with governance, making sure that we've put the right recommendations to the board, and then anything within this that we can shorten document for CA board by taking matters that can be approved, assuming they will be now, here are removed from the paper. That will produce a nice, concise, shorter paper for CA board if we're able to do so.
Excellent, thank you for that. I'm going to take that on. Yep. Okay, I'm going to therefore move to item 11 on the agenda, which is the exclusion of the public and the press. And we pass the following resolution that in accordance with section 100A4 of the Local Government Act 1972, the press and public be excluded from the meeting due to consideration of the following items of business, as they involve the likely disclosure of exempt information related to the business affairs of any particular person, including the authority holding that information. Accordingly, we're taking off the offline for the public. I'll be advised.